Yeah, so I'll bring that up because the numbers were a little bit more benign than expected, right? And Jeff, you can take the deepest of all dives into Nike. I was following that news. It's like a soap opera.
Yeah, it is a little bit.
Yeah, it'll be fun. It'll be fun.
It's a tragedy. Sad.
And those prices, like I think you had ON and Deckers. Those
Yep.
prices there, are those your buy limits, or is that where the stop?
That's just where they were trading this morning. That's that.
Okay,
I just kind
okay,
of wanted
okay.
to time stamp it rather than stamp it.
But you would buy them at the market, right? Because they're on your buy list.
Well, I would have bought them this morning. They were lower this morning, and I kind of thought we'd have a nice zesty trade to talk about, but the market got rational on me pretty fast, and so now they're about flat. For a while, they were all down about 4 or 5% in sympathy with Nike, which is the exact wrong response. Nike could not be more screwed, which is just great news if you're on Cloud or Tech.
Yeah. And the
it was an incredibly bad call.
Yeah.
Nike was just terrible.
And the futures were indicated down heavy, and now that the market's open, the Nasdaq's down 0.5%, but before that PCE number looked like it could have been another 1 or 2% down day.
Yeah.
Anyway,
yeah,
I'm going to lead in with all that. Jeff, I'll start with you, and then Charlie, I'll go to you.
Cool.
And if you guys have questions for anyone else, please just dive in.
I can't believe Nike still has that 30 PE. That just is crazy. They've been so bad so long.
Yeah.
Never cheap.
And did they finally get a retail guy to come in? I know the controversy of the last CEO. Wasn't he a tech guy?
Well, he tried to take them online really aggressively. He kind of told all the vendors that they could just get stiffed and had nothing to do with them. And then so last night's call was really kind of, we're just going to undo everything he did. The problem is it's not 2018 anymore, so I'm not sure that's the plan.
Is the founder of the company still around?
Oh yeah! Oh holy crap! He's around, and he is the official transfer portal funder of the Oregon football team. So yeah, he's around.
Did you see that film about Nike and Michael Jordan that was in the theaters a couple years ago?
With Affleck and
Matt Damon and stuff.
Yeah.
I thought that was stuff. Of course, I read the book too, Shoe Dog or whatever it was called.
It's a great book. That a terrific kind of Christmas recommendation book. I really love Shoe Dog and the Phil Knight book. I mean, those business kind of memoirs can hit and miss pretty hard.
Yeah,
Jack Welch falling into this category.
Classic American dream story.
Total stud. Stanford Business School guy. So it was just a great model, well executed, and way outliving its usefulness. It's weird talking to my son about Michael Jordan, who he tries to be respectful to me, but he's like, Dad, like you watch the Jordan highlights, and there would be kind of mid-level ESPN type of crap in the middle of the show.
There's a lot of other dudes today doing that stuff.
Well, they all imitate. They stand on their shoulders of Jordan. Which is neither here nor there. Each happens to us all. But if you're Nike, what the hell are you doing? Why is your entire sportswear line named after this guy who is largely known by your core customer as just kind of a surly old drunk in documentaries? Just kind of shitting on Scottie Pippen, who you also don't remember.
Yeah,
it's like, wow, are you positive I want to buy clothes like him? He gets something like 20 cents a dollar on some of that Air Jordan. I mean, which is just cash flow. I mean, it's an amazing deal. Yeah. But I compared it last night on Twitter to imagine if you're still paying Chuck Taylor, the guy that played basketball in 1920, cash every time you sold Chuck Taylor.
George Mikan. Hey, Jen, how are we looking here?
We got the Mikans. I think Jen left. It's
Hey,
Christmas.
Jen, you want to go through the
Everyone's
queue
taking
here?
off early.
You ready to roll?
Jen did not leave, and you can start now.
Oh, okay. Can we start?
Charlie, can you hear
Yeah.
us? Okay, great. You can start now. Have a good
All
show.
right. Hey, welcome back to Wall Street Beats, everybody. It is December 2024. And if I have this scheduled correctly, you can trade today until 4. You can trade Monday. The market shuts down at 1 Eastern time on Tuesday. So you have a couple hours left to place your 2024 bets. We'll see what happened. I'm very intrigued today. We have the November PCE number out, maybe a little bit more benign reading on inflation. It definitely took very heavy downward pressure in the stock market futures this morning, and when the market opened, a little bit less pressure. We're probably seeing a reversal of the Trump trade, and that didn't help last night when he went against his own party on the stopgap measure for funding the federal government. Probably more chaos will ensue in the next 4 years. And we have a real interesting tale to tell about one of the most hideous quarterly reports of all time from our buddies at Nike. So I'm Paul Meeks. I'm typically a tech voice moderating today. I am with Jeff Macke and Charlie Peabody. So with that entree, Jeff, please take it.
Yeah, I mean, worst of all time. I'm a fan of bombast myself, but it's December 20th. It wasn't really even the worst quarter that Nike's turned in this year, which says a lot about kind of the quality of Nike's quarters this year. The new guy, Elliott, he was passed over before, and he came in, and last night essentially said, "We're going to unwind all the crap the last guy did. He was a moron, so we're going to fix all that." Unfortunately, it's not 2019, so I'm not sure it's the way back. It was exactly the disaster we thought, and the real takeaways for me were that there's more kind of meat on the bone when it comes to one of my favorite trades of the year. Talk about it endlessly. Buy anyone making shoes except Nike, because Nike came out, the big shock of the announcement, and the stock was up 9% after hours at one point, and just being inveterate rug pullers that they are, they waited about 45 minutes into the call before they finally gave guidance, and they said, we're going to be down low double digits on revenue next year. Now, for Nike, that works out to a run rate of about $6 billion. If you're On Cloud, if you're Deckers, if you're Skechers, if you're anyone else making shoes, you're taking share like crazy. If Nike's losing $6 billion, that's more than enough for OnCloud just to kind of take their share of it. Now you add a decent consumer, you add a lot of trends that are working in OnCloud's favor. And my favorite trade of the year works longer, which is in this case, not really short Nike because it's exactly the disaster we thought. We can get into it. They're going to be jamming down margins a shocking percent over the next 6 months at least. They don't have anything new coming into their pipeline until what they said was fall or the holidays, which probably means 2026, which is also when they're finally going to get a Caitlin Clark shoe out. There's nothing good happening there. That tells me that they're going to be still losing share, still going to be the vendor's second choice behind Deckers, behind Hoka's, which you can sell for $200. OnClouds you can sell for $200, or Nike you can sell for 30% off. Nike's going to jam their own channel and unwind everything. It's going to be enormously expensive, take at least the next 6 months. That seems to be kind of priced into the stock a little bit, but it's not priced. It implies a great deal of growth and a continuation in this trend. I think this is a trade you don't have to outthink it. I was trying to get long some OnCloud this morning. It was lower on as the ticker. Kind of the most aggressive of the plays, pretty expensive. We're not brand new into this trade. But again, their growth for next year, it's a $2.5 billion revenue company expanding in a lot of different markets and taking share from a dying $50 billion gorilla. It's a beautiful place for these shoe companies to be, particularly with all the tailwinds they have. And that's the trade. Just get long and stay long some of these things. Expect it to be a bouncy ride because they're all expensive. But then again, Nike's at a PE of 29, even with today's declines. Their earnings is just going lower. That's going to keep the PE high no matter what the price does. Shareholders have been beaten senseless. It's trading at 2018 levels, and that's about what it deserves.
Hey, Jeff, when I hear about these drastic turnovers, at least from my perch, covering the tech sector, you're the consumer discretionary expert. When they say, 2 quarters, I mean, is that even feasible? Wouldn't such a gargantuan a significant turnaround take all next
Well,
year. Plus,
here's the thing about it. Now, if you want to be a glass half full guy on this, you can say that's terrific. Give it half a year. Don't lowball. You don't come in as a new guy and say we're going to turn this thing around right away. 6 months sounds reasonable. We're going to take our margins down. We're going to get some of this stuff out of the pipeline. The problem is you need new things to put back into the pipeline, and that's where Nike's been failing. I keep track of it just as kind of a wonky thing. When you listen to a lot of conference calls, you look for things to keep them interesting. And so I just track how many times Nike uses the word innovation in their conference calls, because it turns out they're making shoes. It's not Boeing. There's nothing really. It's not an AI company. There's nothing really fantastic going on there. 47 times in June they promised us innovation, Paul. That's a problem. Now on the upside, they only used the word 19 times last night. On the downside, they also don't have any new shoes coming in the pipeline for another 18 months. So maybe they have flubber shoes, those bouncy things that were in the Nutty Professor years ago. That's a possibility. That would be exciting. Shoes that can let me jump 10 feet. Failing that, and I don't want to dismiss it entirely. I don't want to undersell the text there, but I question their innovation. I question whether that's even a word that you need to apply. I think they just have missed fashion cycle after fashion cycle. Yeah. And as a result, they're stepping away from instance, athleisure. They're all about sports now, which means equipment, and that's all well and good. But if you're Nike, you can't miss the $70 billion now athleisure industry just because you're trying to sell Air Jordans to kids who've never heard of him. He's not the fashion icon they think. Nike had to own that place. They didn't get it. They aren't capturing the move from dress shoes to more athletic shoes as everyday wear. How in the sweet hell do you miss that if you're Nike? And how are you not getting into it now? It's nuts. That's where all their growth is coming from. And if you're this big, you can't miss those windows. You can't miss trends to that degree.
Is there a valuation? Because I imagine it's maybe trading at the lowest valuation in its history.
No, because the earnings keep going lower. So
yeah. But is there any valuation ratio that would say, regardless of the pain, this is a oversold condition, and if I'm a value buyer, at least for a trade, you see it falling more and more and more?
You see where the little line is now, and you don't get points for being a hero. You don't get points for being the guy who called Nike and finally got it right. They've been carrying those guys out in boxes since 2018. And so I want to see innovation. I would love to see them prove that they can make a shoe that is actually going to be popular with someone like my son. Or really anyone's kid. They're losing to Adidas, they're losing to Hoka, they're losing to literally everybody. That's a huge problem. It's a really big problem. You could argue it's involved large numbers.
This, support level at that 2010, 2018 low, Katie bar the door. It could probably go down considerably.
You're kind of in parts unknown. And again, we're at 29 times earnings right now. And that's next year's earnings. And based on this year's earnings, they're probably going to miss. And so you end up with a $60 stock that's still at 30 times earnings a year from now. That's a bummer. That's how they take away all your money if you're running people's money. And they kind of should. So I'm not going to be the hero to call bottom of Nike. I don't want to short it. I just love it as this feeding trough for everyone making shoes everywhere else in the world. We end up with better products.
This question before I turn the table over to Charlie. I won't see you before 2025. Some of our subscribers may not see you. But as we go into next year, if I'm a portfolio manager and I can invest in any name in any sector, if I was to say, Jeff, consumer discretionary, overweight, underweight, neutral weight, the S&P.
Give it a rest. This year's been defined. I know the trend is really up and they look great. That's a function of the kind of the way you measure these indices. But what's really defined this year is just winners and losers. It's been, man, if you were long Target and Walmart even weight, you didn't have the year that you probably should have. If you were long Walmart and Costco, you made a ton of money. Walmart and Costco, those are two examples of Walmart has been public for 60 odd years, maybe a little more. They shouldn't really be doubling over the course of 1 year. That's up 89% year to date. That's an awful lot. And I'm not sure what they're going to do, but if you're the largest retailer in the world, you're going to grow up as some function of global GDP. it's a lot to ask of these companies. So those are going to rest. But I'm looking at some of the smaller names. Can Target come back this year? Can they find a raison d'etre to really, what is their place in this club store universe? I'm not sure. I'm still, it's really hard to sell a Costco. It's really hard to sell a Walmart, but there's still sources of
And
funds
Jeff, I
just for
heard
any
that
trading.
both Walmart and Costco are going to start making GPUs for AI data centers. So
Could
we
be.
got that
Walmart
now.
actually does have an AI part of its flywheel. Don't make me pretend like Walmart's an AI company, because there is a thesis out there trying to, people are trying to.
Oh,
How do you justify this company that's growing at 6% and it trades at 40 times? You got to come up with something. And sure, AI works as well as anything.
hey, Charlie, how are you, my friend?
I'm doing well. How about you, Paul?
Good to see you. So I would imagine, since your sector is pretty tightly correlated with interest rates, you might have some thoughts about the PCE this morning, inflation, rates going up and down, particularly as Trump is about to take office. So share that today.
Sure. Obviously the PCE came in a little bit better than expected, 2.4%. The 10-year has rallied on that. It's back down to 450, which I have viewed as a critical level.
Yeah.
I will tell you, I still think long-term rates are headed higher into the spring of next year, summer of next year. I don't know the squiggles between now and then. Could we do some work around 450? Certainly could. But I think somewhere next year, 5% is on the horizon. What's interesting also, this morning we got the consumer sentiment index from Michigan, and it rose for the fifth month in a row at 74. And so that's constructive. But within that, there are a couple of things worth noting on that consumer sentiment index. One was that consumers' expectations of inflation rose. And so now they view inflation as somewhere around 2.8 in the short term, 3% in the long term. And that's something that the Fed doesn't want, is entrenched high inflation expectations. So that bolsters the case for the Fed not to ease aggressively going forward. The other thing was, and I mentioned this the other day when we were talking about car sales, the consumers' expectations of tariffs leading to higher costs for durable goods was rising. And we talked a little bit about how car sales have been very robust, running at 16.4, 16.5 million unit rate annualized. Here in the fourth quarter. And I think CarMax actually had some very good numbers the other day. But the consumer was definitely saying, we want to buy durables now ahead of any tariff increases. And so I'm wondering if this isn't a good time to sell those car dealer names on these good news. Because again, affordability is still an issue in the car industry. And incentives are rising, which is at some point going to hurt gross margins. And to that end, Paul, you might be able to help me out here, but I think Micron reported disappointing numbers
Yeah, sure did.
the other day. And one of the things they mentioned was the disappointment in the automotive industry.
That's right.
And I
Yeah,
think
what happened there is, Micron has a good part of its business. They make something called high bandwidth memory chips for AI applications. That's going great guns. Unfortunately, their legacy, let's call it non-data center stuff, is doing poorly, and it's worsening. And you're absolutely right, Charlie. They highlighted weakness in smartphones, PCs, automobiles, and other industrial applications. And so that bodes ill for the component makers of all these semiconductor companies that do business with the autos.
Yeah, and one of the things they pointed out was the smaller, compact or subcompact cars use less chips because they're less sophisticated. And that was something I pointed out on the call 2 days ago, was that when you look at car sales, while overall they were very robust, the cars that we're selling were the compacts and subcompacts, those that are average around 33,000 MSRP, retail price. Whereas the sedans and the trucks that were averaging 54,000 were not selling. They were actually down year over year. So if that's what's selling, you're going to use less chips for those compacts and subcompacts. And I think Micron mentioned that as well.
Yeah. Well, it's also going to be very interesting. On the campaign trail, Trump said that he was going to rescind the 7,500 EV tax credit. But now some people say that the de facto president is one Elon Musk. And will he go forward with that or not? Is that something you can do by executive order or not? We will know in a few weeks.
Yes. So anyway, the affordability problem for things that need to be financed continues to be a problem. And that means houses, boats, cars, RVs, motorcycles like Harley Davidson is still having problems. Anyway, so Paul, if you don't mind, I'm going to switch gears here and talk a little bit about housing because
Yeah.
that also is an issue of affordability. And yesterday we got the existing home sales data. Thank you, Jen. And you can see it came in around 4.15 million. It's still a fairly depressed level, but improved slightly. The one thing you should be aware of, those are the sales that were contracted back in September. And that's when the mortgage rate was around 6%. And now we have a mortgage rate that's over 7%. So I don't expect that existing home sales number and the strength of that number to persist. The other thing, Jen, if you can go to the next chart, is the Realtors Confidence Index. And two things I want to point out there. First is the number of days on the market has continued to rise. That's on the far right-hand chart there. And then the amount of what I would call speculators, that would be the second bar chart to the right, sales to investors, has dropped off considerably. So I think you're seeing less interest in speculation, and you're seeing a need for more cash sales. You're seeing houses stay on the market for longer. The final thing that I want to point out is on the very left-hand bar chart, first-time home buyers continues to decline. And Jen, if you can go to that last chart, this is also existing home sales. On the left there, you see, the lower end housing is declining in terms of unit sales year over year. On the right is the high end. And so because there's an affordability problem, the first time buyer is having a hard time, buying houses, whereas the cash buyer or the luxury buyer continues to be a support factor. I do think that will change, and we'll see that the luxury buyer will step back as well. So this spring, if I'm right on going back to your original question about the PCE and rates, if we're moving, closer to 5% by spring, it's going to be really hard for this existing home market, to show strength in the spring. And that's what, if you listen to the Wall Street sell-side analysts that remain very optimistic about home builders, I think it's going to be a very disappointing spring selling season if mortgage rates, stay above 7%. The last thing I will mention, obviously, I'm talking about existing home sales. For the home builders, new home sales is the more important piece. We had a very disappointing report last month for new home sales, and we get that next Tuesday for November. The commentary we got out of Lennar earlier this week was very disappointing about what they saw happening in the fourth quarter. So I'm not expecting wonderful things on Tuesday from the new home sales numbers. I will say these stocks now have been taken to the woodshed, and they're coming up to some kind of support level. So I'm not sure I would short them down here, but I'm certainly not a buyer. And if there's any kind of New Year's Santa Claus rally or bounce, I would want to get back out on the short side. But I'm not pushing my shorts here on the home builders.
Well, Charlie, if rates do back up within your banking coverage, that's going to hurt the regionals and not so much the large cap money center banks.
Yeah, and you've seen a better bounce in the JP Morgans and the cities, but I do think there are certain regionals that have been taken to the woodshed with over the last 3 days that I would buy. An M&T Bank, MTB is the symbol. A Buffalo-based bank is one that I like. Um, so yeah, I'm still willing to buy. I think there's going to be a good rally into the new year in the bank stocks. So I'm willing to buy the regionals on this weakness here.
Well, Charlie, I bought some Citigroup after we appeared together about a week ago, so I'm looking forward to that beat on January 15th or whenever that's going to be. And then also, you guys, I've been following this news in tech land about the latest valuation rounds from some of these marquee and not even marquee privately held companies that I think are preparing for some big IPOs. The tech IPO will open this next year for the first time since 21, and it'll bring a lot of excitement, and it's got to help the folks like Morgan Stanley and Goldman Sachs and JP Morgan with their banking reps.
Earlier this week, we held a call with French Hill. And for those that don't know French Hill, he is the newly elected chairman of the House Banking Committee, representative out of Arkansas. And he highlighted three things as his priority. One was deregulation, the other was stablecoin. But he then also talked about how he wanted to improve access to capital and liquidity through a better capital markets to the mid and small sized companies. And he was going to work with the SEC in trying to enhance capital access through the capital markets for these companies. He was a community banker, and so he's trying to level the playing field between the big guys and the small guys a little bit in banking. And he is definitely going to push for ease of raising capital for those mid and small guys.
Yeah. Well, it'll be interesting. Well, that's all the time we have for Jeff, as always. Thanks for your comments. Charlie, the same thing goes.
Absolutely.
And you should know behind the scenes that one Jen Seelig, our executive producer, does a ton of work. And Jen, I tell you that I appreciate
She does, yep.
And I will see all of you guys, right? Probably after the holidays. And I wish everybody.
Hey, Merry Christmas, man.
And for a Christmas gift, get your best investor friend a subscription to Wall Street Beats.
Yeah,
we'll see you next time.
Thanks, Paul.
Take it easy, guys.
Thanks, Jen.
Thank you, gentlemen. Thanks, Jen.
You're so welcome. Nice plug there, Paul.